What can we expect from gold and the metals in 2017? Joining me in studio today is Mike McGlone of Bloomberg Intelligence. Mike, welcome back to the studio. Happy to speak with you.
Hello, thanks for having me back.
So what can we expect from gold? Just to recap, 2016, it was up against a strong dollar, rising equities, and now we're throwing a rising rate environment into the mix here. How do you see it stacked up here?
Well, in that environment, you look at last year from maybe 30,000 feet, we had that environment. We had the main adversaries for gold were up, stock market and the dollar, and gold didn't go down. That's a good sign of a pretty solid foundation, I think, in gold for this year.
But you also say that the metals may be, providing us with another sign, that they may be an indication of normalized inflation. Explain.
Well, we keep hearing the Fed talking about a normalizing interest rates. And to see that, you need the more normal inflation. So last year, I think probably look back as the year we had negative interest rates, and maybe the lowest interest rates in history. And it could be the reciprocal of 35 years ago when interest rates peaked. The metals are oftentimes a very good preliminary indication of inflation picking up. Not really gold and silver, but most notably the industrial metals. And that's what's really happened in the second half of the year. Industrial metals have done very well. In fact, they've doubled the increase in the value in the precious metals. So that continuing is what we want to see. And for people worried about inflation, the economy picking up, and that being bad for gold, I ask, since when has inflation been bad for gold?
Okay, so I'm sensing optimism from you. You think that gold will perform well if we look at the first quarter of 2017?
If we get some, speaking of that word normalization, we get some normalization in volatility, i.e. maybe a few signs of a correction in the equity market to stop going up. That market going up like it has been is dragging a lot of interest from a diversifier asset like gold. And for the dollar index, a 14-year high, yet gold is still more than $100 above that low. That's a good sign of a foundation for gold. It's going to take pretty substantial increase in the dollar index or dollar value, and probably a pretty substantial increase in the stock market for gold to be put to the wayside and decline.
You mentioned the industrial metals. We're seeing copper, so much enthusiasm in this space here. Do you think it's excessive?
Well, it is. It depends on how long it'll last. It's similar to where gold was in July. We had record open interest, record long positions, record commitment of trader longs, management longs. Copper's the same way. As far as open interest increase this year, it leads all commodities. Record open interest and record increases in managed futures positions. That's an indication that market might be swaying a little bit too far to one side. It might need a little bit of normalization positions before it can go to the next level.
Mike, finally, your thoughts on silver. We're seeing it having a little good pop here right now. Do you think it's going to have a good streak with talk of Trump's infrastructure spending?
Yes, it would be nice if that was a key factor, but really the demand for silver is up twice the value of gold last year. Similar to industrial metals, it's much more industrial, and I think it's more like the quasi-leveraged gold. If gold's going to continue to be supported and go up, leverage, silver should go up more, unless gold goes up for bad reasons, meaning it's just as a diversifier, safe haven asset. But overall, silver is more like industrial metals, like copper is doing better because of that demand.
So what are some ones to watch here in the commodity space?
Well, I like to watch some of the commodities that are really left to the wayside. And one of the key things that sticks out is platinum. Platinum's cheap to gold historically. It's cheap to copper historically. It's cheap to palladium historically. So you have to look at the value in the market. Okay, copper's picking up and it's looking good. Gold's getting a little rich, but you have to look, where's the value? Platinum seems to have some pretty attractive value.
All right, so underpriced right now?
It looks that way compared to a lot of the other metals and compared to normalization. If you pick, economies, the global economy is shifting more to consumer demand. And what does that mean? Auto sales, platinum more highly correlated with auto sales. And it's an attractive catalyst compared to palladium. So it can only get so cheap compared to palladium.
I know you have a soft spot for the PGMs. Mike McGlone, thank you so much for joining us.
Thanks for having me.
And thanks for watching our coverage in studio. We'll have more for you on Kitco.com. Stay tuned.